Well, Coinbase is seeing a steep sell-off in the session, down nearly 25% here after crypto exchange reported a decline in trading volume and monthly transacting users. The company posted a first quarter loss per share of $1.98 on revenue of $1.2 billion, missing analyst expectations on the top line. Of course, Coinbase made its public debut about a year ago, and it's been straight down since then. You see the chart pretty much says it all. Brian, the numbers are worth mentioning here. Trading volume fell more than 40%, revenue down 35%, monthly transacting users down 20%. But when you look at the stock move, I mean, you could argue part of that is also what we heard from Brian Armstrong on the call, who essentially said, look, we're primed for this kind of decline. We've been in choppiness before in the crypto space. And he said, this is a big opportunity for us. And then he talked about the expansion in the NFT marketplace. And I'm not sure in this environment right now, investors are listening to this and saying, well, you're not going to be profitable for some time, but that's where the bet is.
Yeah, I mean, 44% was the amount of decline that we saw in trading volumes for this company. Now, for what is supposed to be a trading platform and exchange, obviously not what you want to see. The whole point of cryptocurrency at this stage right now is to maintain liquidity. That's why in the NFT world, you see so much chatter about every time that there's a new NFT project coming out, you have these NFT traders that are saying, we're observing massive liquidity sucks because it's the same people, the same community of people that are investing in NFTs going into certain places. So when Coinbase, one of the larger exchanges, is seeing a decline in trading volume, that's going to hurt everyone, not just in the NFT space, but in the crypto space where they've kind of made their bread and butter. The NFT business is interesting because this is supposed to be their big revenue growth stream. But only about 1,800 users was what I saw this morning, according to Dune. It's a site that kind of tracks traffic on these exchanges. That is not a lot for what is supposed to be one of the big hitters entering the NFT space. Obviously, OpenSea, one of the first to be there, kind of commanding the space. But if you're an investor looking at this and saying this is supposed to be the big shiny thing that's going to make this company money in the future, you're looking at 1,800 users in totality. That's just simply not going to do it right now.
Yeah, the user base isn't there. And to your point, if it is about those crypto holders who are going to buy into the NFT marketplace, this is probably not the time to do it. I want to see if we can pull up the Bitcoin chart again there too, because obviously this is a stock that trades in tandem, right? The exposure is to crypto. We've seen Bitcoin down, just roughly half of where the highs were.
Yeah.
It's a lot.
It's a lot. Yeah, it's down a lot.
Since November. And we've seen a number of firms already slash their price targets. JP Morgan at $171 from $258. Goldman Sachs also downgrading the stock to neutral too. So
yeah, and
it's not good all around.
The other point I'll just bring up quickly is that, Brian Armstrong, the whole tone of his earnings call was, quote, I think the real key is to mentally flip from seeing down markets as being scary to actually being opportunities to pull ahead. So the translation there is HODL, which I think is the broad sentiment that the entire crypto community is facing right now.